It's being recorded. So where's Loki at? Let me make sure Loki is here real quick. Nah, he's not here. Let me. Hold on. Let me write to him and see where he's at. All right. So I'm recording it so he'll see it when I release the recording. So structure. That's what we're looking at. Let me remove this watermark because that can be annoying at times. Structure. Great. So, what do we know about the basics of structure? Basics of structure is we get a high, we get a low, we get a high, we get a low, we get a high, we get a low, we get a high, then fold. I'm going to leave it right there. So, let me. All right. So, here is the entire cycle of a trend, both up and down trend. So, with these areas here, this is swing points. We've watched a video plenty of times to understand that in a bullish move up, your swing point is after this low is put in and we violate a high to the left. Violate a high to the left. That creates a high that's higher than the previous high to the left. And this all sounds redundant, with some of the videos, but it's better to have this all laid out in one motion so you understand what you're looking for. We are looking for price to do these things within here. This same type of movement, lows, highs we're looking for. We're looking for reversals, there's imbalances in there. We're looking for all of that stuff. But the one thing that needs to remain the same each time is that you're trailing your highs and your lows. That's it. Trail your lows. Trail your lows. Trail your lows. Trail your lows, which is equivalent to counter pullbacks, counter pullbacks, counter pullbacks, counter pullbacks. Whichever one that you create in your head as to, where you are in the market, you start with that. If you open your chart, you're starting with this. Where are you in your trend? In the current trend? What are your last highs and lows? So we come in, we find our swings, we trail our lows, all of those different things, and we wait until we either have this here or we're looking for a continuation here. Now, when do you begin looking for a continuation versus when you begin looking for a short? Do you look for a short here? Do you look for continuations here? Those things we would need to know before, placing an entry. Where are we looking for a short? Where are we looking for a long? It's not that you're just going long because price just flipped. Price can flip right in here to go back up, just tap something in there and then continue down. And now you're finding a little long within here and it's just pulling back to continue short. But you want to hold from here because you're hoping that we get back up here. Without considering everything that happened in here. So we begin to look for shorts. Here's the answer. We begin to look for shorts the minute we see structure shifting. And we've tapped into a higher time frame area. What does that area have to be? It has to be responsible for something. So we tap into that area, we shift structure, and then we begin looking for our reversal back to where? The beginning of the trend. So a ton of you here already know, how to trail these highs and lows in an uptrend, how to trail your lows and highs in a downtrend. Couple of you, well, most of you already know this, given that you studied this and incorporated this in your everyday trading. I get that a couple of us we scalp little tiny movements that we get from, like these little areas. And, we try to scalp, we cut profit here, and then we try to find the next thing coming down or the next thing going up. Those things, you could scalp within any area of this. But if you want to hold entries, you need to know where you are in the market. You need to know what's happening, what's going on. So in order for me to hold an entry that comes up to my area above, up here, in order for me to hold this entry, I would need to, one, be in a higher time frame POI back here. I would need to wait for a structural shift below. Now, in candlestick structure, you could potentially find a shift right at the top back here. And if you're taking that first structural break, you need to remember that we come back to retest the area. And oftentimes that can be right up within that zone. So a lot of the times people get into an entry here, they take the short and it comes back and takes them out at break even. And then it goes. Because we know how to find the first entry leaving the area, but we don't remember or take into account that after this taps and shifts, there's the retest. And in video 2, we talk about the first tap breaking structure to the downside and the second tap double top and short. We talk about that sequence. And that's because that's what happens in a higher time frame POI. Some of the POIs that we have on the 1 minute, price can come and tap right into it and shift away and keep going down and not even come back up there until the end of the session. And towards the end of day, you see us making our way back up to that area that we didn't tap. So Given that you're in a higher time frame POI to the left, that's when you begin to look for this. If you're not in a higher time frame POI to the left and you're just on the 1 minute, you're not trading this because you saw this happen. You're not trading that because you saw that happen. Because as I teach, whenever we have price making its way up like this, you have to take into account that the first break oftentimes can just be the liquidity grab to trade higher. And then when we begin to make our way back up, you get something like that. And now that grab actually begins the trend heading down. And oftentimes this second path that I drew is how you find the reversal. Not this. This is just simply teaching you market structure and a shift in market structure, and then the trend begins to go down. But one thing that a lot of people miss, which, you guys are in premium, you guys need to take advantage of all of the videos that are there. All of them. All of them. Advanced market structure is where I touched on what is present here before we run the low. What is present before we run the low? And I really do believe that, that's something that, if you don't even understand the context of me saying that now, I think it's something that you should certainly go back to study and watch, because we have this market structure heading up, bullish structure. Then we have a bearish structure taking place directly after. A lot of the times this bearish structure that begins, and I know a lot of you have seen it, a lot of the times this bearish structure goes like that. And then we could try to make our way back up, and then you see us go down again. And then you see us come up above this high, tap up into whatever area we have here, and then you see us short, like that. That's how those structural shifts tend to happen on higher time frames, in higher time frame POIs. So when it happens like this, and it takes out a couple of the structures below, and we tap back in, we run the low of the trend, and then we push back up way into what is usually the 50% or so. And then what? You see us continue down, just like that. And all you see as you draw after is the trend line, like that. Once that low is violated, you watch us go like that. And you see the violation of the low, the drawing down here. We take out this low. And then we trade back into the range, and then we come back below it. What I just explained is no different than this. It's no different than that. I'm saying it's no different than this because this is just the order flow that we see take place. That's just the order flow. Short, tap back in, continue down. The rest of this and this here, and taking out this low and coming back within here to potentially head back down through there, that is higher time frame order flow. But the higher time frame order flow is the same as the lower time frame order flow. It's just that with the lower time frame, when you see this, you see little wicks that are in here. Like that. And you begin to ensue a dump heading down. Dump, 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 dump. Keep going. Sometimes come and tap the very bottom of it. Dump, 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 dump. Keep going. Comes back up for the imbalance here. And then shorts. So that's the complex way to understand how the market moves in terms of the order flow. I get that I give you guys zones to trade from, and the zones, some hold, some don't. The zones were particularly for, and this is a good example here too. The zones were particularly for you to have somewhere to start. You start with the selection of the zone, and the selections of the zone begin to show you the order flow that happens around them. So choosing the zone is half the battle. Having to sit there and remember what it does in and around and after the zone is taken, guess how much time that takes? Oh, y'all love trading for the 15-minute, right? You like trading for that. Yeah, 15 minutes cool. 30-minute hourly is cool. Yeah. What happens if 15 to 50, maybe even, hourly candles form after the touch of this hourly zone? 50 hours of data, and then it comes back here. Tell me, how many hours of data do you remember from that time frame? 50 hours of data that happened before you got back here. Would you have remembered this tap even? Absolutely not. I don't even remember some of the taps that we tap into from like a higher time frame days ago. But if the 1 minute, observing price on the 1 minute and what it does around these zones, especially the zone that the high is put in off of, and then we violate, especially that zone. But when you're learning about what price does in and around these different zones, then now you know how to trade it. You start to understand why we tap here, why we come back within here, and then why we ultimately run the low. And you guys see me all the time put trend lines on these things, and just take random points, and you guys see me start to do this like that. You see what this is? Trend line, right? You always see me draw that, and price comes and stop, and it shifts up. But what you guys don't notice is that the beginning of the move taps on top of it. Something mitigates that and pushes higher. We leave this zone entirely unmitigated. Not entirely, but most of it unmitigated. And we come right back to it. And it looks like we're going to head in, and you see us trade away. So the minute that happens, guess what everybody's doing? Oh, we got a demand zone. We're waiting for price to come back into the demand zone and trade higher. Once they see that flip, that happens there. Mind you, it's a bearish flip, but they're seeing the bullish flip on the 1 minute order flow. So they're following the bullish flip, not understanding the higher time frame order flow that price is in. So though this is a flip right here, it's temporary. It's to retrace and go back down. And a lot of the times, this little flip that you guys see me mark out on this trend line, a lot of the times it just pushes up barely within that low. And then you see it short and run the trend line, tap into the zone, and then high get taken, tap back in, and continue. Mind you, you can't get involved on this because you're so scared that this is not going to hold because you tried to force this. This is what your bias was. This is what price did. And your bias was formed that way just because you saw a 1 minute flip in here. Not even understanding how true order flow works. That's why, when I see some of these guys, like draw zones that I draw and don't even know why they're using it, don't even know how to trade it. They just, want to do what I do. Do what's in the playlist. Do what's there. When it comes time for you to trade, you're not going to be using the same zones that I use to trade off of. Most of you guys don't even know. I tell you guys to stick to zones, but I do not trade with zones. I trade with order flow, not zones at all. I'm not marking out anything and taking a trade off of the zone that I marked out. This is a zone to buy, so I'm going to buy. Nope. The way I'm trading is this is the order flow that we're currently in. Here's where price is delivering to. You have to find a way to get in with minimal drawdown, at least that's my goal, and continue the rest of that move. Something needs to happen first. And on Friday's stream, I had mentioned that. What did I say needs to happen? What do I need to see? I need to see my S&D right here that's responsible for the breakup structure right here. I need to see it violated. And when I get that violation of it, oftentimes, and I guess this is where sometimes ICT's breaker block comes into play, oftentimes price will come and tap right into the area that it fell out of and then continue down. And now you'd begin to see us go back to where? The beginning of the trend or the origin of that move up that took a high to the left. Y'all hear that? The origin, this area, that took the high to the left. So that doesn't have to be the beginning of the trend down here. It can just be the area that's sent it up. And that area is in between the move that sponsored the whole trend. And what does this area become on a larger time frame? This area right here? That area on the larger time frame is the same area that I just mentioned in here. This is the S&D responsible for the break. This would be the S&D responsible for the break on the higher time frame. And if you see it enough and you spend enough time observing what it does in and around these zones, then you'd be able to follow that too. But you need to start from somewhere. Where's that somewhere? That starting from somewhere is trailing your lows, counting your pullbacks, and paying attention to the important areas. S&D responsible. Let's say this swing didn't happen yet. There's a S&D responsible here. Let's say this swing didn't happen yet. There's a S&D responsible right here. So we don't know how many swings we're going to create going up, but we know that when we leave them intact, continue higher, tap the S&D responsible, continue higher, tap the S&D responsible, continue higher. And then when price begins to, get a lot of volume in it, we're no longer only tapping the S&D responsible. A lot of the times, we could just be tapping the imbalance that was created on the shift of the high. Imbalance created on the shift of the high. We come back into here, and you see us go. And what? You could see price dip below this, come back to where? S&D responsible, and continue. Now, some people might say, how do you know which one to choose to trade with? It's a good question, but it's based on your memory. I can't tell you, place your entry here, put your stop here, and your TP should be here. And that's the way it's done every single time. I can't tell you that. Because you need to know first, where are you in the trend? Where are you in the trend? And then, you begin to get the answers. So let me go to, this is Solana. I was looking at the 15-minute of this because the order flow in the 15-minute was actually pretty decent over the past few days. Look at this. Now, I know I said the market don't move like this, but it did today. So look at this. You got your low, you got your high that the reversal put in, right? It's your first, there's your low, your high, you're looking for another low to get established. You get that low established and you shift the high. Now you know where the protections are. Now you know where the origin is. Now you know the area that started the move, and you know what to start to look for and target on the other side. And if price breaks down, you know what you're going to be able to, or what you're going to begin to, look for after the breakdown of it. So we have, let me just make this look a little presentable. We have within here our high, our low, our high, our low, our high, our low, our high, and then a violation of our low. So this is just the standard, playlist. Highs and lows, violation of it. So the biggest obstacle that people are having is when we violate the low, right here, they anticipate price to tap back into this area and then short to the beginning of the trend, right? Yeah, yeah. That's what we anticipate. Too short to the beginning of the trend. And if we look, let me see here. What is the high over here that's responsible for the violation of this low over here? That's here, right? So when we run that high, what happens? Let me see where. When we run this high right here, what happens? If we look within, and this is running a higher time frame structure. This high that was put in was responsible for this whole market reaching into here. And before price came back up to it, we took out a series of highs to the left that belong to this time frame and not to the higher time frame structure. There's only one high that belongs to the higher time frame structure that if we violate, you're looking for the S&D responsible for it. There's only, y'all hear that? There's only one high on any given trend that you are looking to be violated in order for you to say that we're reversing on structure. If you don't get a violation of that, you're not looking for price to trade higher into the highs above or lower into the lows below. And that's an advanced market structure. I'm not going to reteach that right now, but that's an advanced market structure. It is one of the most slept on videos in the playlist. So we violate this high. After we violate it, what do we do? What do we come back to? What do we come back to test? We come back to tap, to trade on. We come back to the S&D, and particularly here, the imbalance just above it that violated the high. That particular high. Again, if you have questions about those highs, that's advanced market structure. Violates that high. So what do? We come back to the imbalance just above it and put in a new high, right? Come back to the balance above it, put in a new high. Not just that. We trade back into the zone and put in another high right here. But then we violate both of these highs. Both of these lows, sorry. We violate them. Both this is a validated low and this was a validated low. We take out both of them. And we go back to the S&D responsible for the break. And if you look here, had I been using a zone that's mitigated multiple times, It's mitigated multiple times. Look at this. Tap here, tap here, tap here, goes, tap back in here. Had I been using that zone, and let's say you use the 30% or whatever it is you chose to use within here to get in an entry, price coming to here and coming very close to your stop here does something to your psychology. It does something to, when you jump into a trade in this moment, it does something to your psychology if it goes near your stop. Now, the fear that you have of coming back here, you might switch break even real quick and then partial out at some high, all because the zone you chose and the reaction that you were looking for, that you depend on to give you that confirmation that, yeah, this is a strong zone that price is pushing out of, you don't get. You get this lingering. We tap into here, you quickly move your stop to break even, you get taken out, price trades back up, you try to get in here again to go up, you get taken out, price trades back in again, you try to go in here to go up, you want to take the high up here, you quickly shift to break even, you get taken out. Do you understand what's happening here? In this whole thing up, all because of the zone you chose? And had your confirmation just been, let me just get rid of some of this. Had your confirmation just been, we do tap into a zone. We do run a low. We need a low ran. We do run a low. We take that out. Look, run. Thank you. Gone. We run a low. Take something before expecting something. So we run that low. Tap into the zone after the run of the low. And then flip. This is the high here that put in this low here. We take out the high. We come back and tap into the 30%. This is maybe more, the 50%. This is maybe more like the 70 though. Let me see. Here. Yeah, this is more of the 70. But nonetheless, if you waited for this high to be taken, that's where your bullish sentiment kicks in. So would you have been stumbling over all of this within here? No. Because you would have took the high, tapped in, maybe found your entry or found that this was the confirmation. And when you got the confirmation, you actually took the entry. And you longed and waited for price to get out of the area. So it's all about, one, the zones you choose, but it's not all within the zones you choose. It's within the order flow and the delivery of those zones, what they're responsible for, what we're currently in. Look, this is all bullish order flow. Look at these imbalances being created on each push up. Each push that you have an imbalance that was created. Imbalance here, imbalance here, imbalance here, imbalance here. 4 imbalances on all those swings back to back. That's bullish order flow. Imbalances. That's bullish order flow, not mitigating itself on the way up, coming back, tapping into the imbalance and making it. This is leaving imbalances behind as it pushes. That's bullish order flow. So if we see this, even if we get a violation of a low, we still see that we're in bullish order flow. We still are aware of that. These moves are going straight up, not diagonal and to the side. It's not moving like this. This is moving sideways. Getting ready to turn and go down. That other structure is straight up, down, straight up, down, straight up. That's super bullish order flow, not this slanting we get like that. That's trendline liquidity being created. So we need to identify the strength in our order flow too. That's important. So you see we have this straight pushing up as we go. We come violate a low and then come back to what? Take out the high right after. Trade higher. But what do you notice about this order flow down here versus this order flow here? And given that price broke structure here, you would want to make sure that you're in a zone back here before looking for a short on that structural break. Are we in a zone when that structure breaks? And are we somewhere within the zone that we look to get rejections from? Let me see. I don't know. I'm just asking these questions. I'm gonna test it out. Hold on. All right, we're right here. Here is where we are. And if you look, we tapped the 30% right here. Tapped the 30%, shifted below. But did we break anything? Let me see. Where is it? Where are we? Here. Yes. This is the last swing here. Oh, there we go. It's the last swing there. What happened here? Because now if we're talking about larger structure, if we're considering areas being violated, advanced market structure, we know that after we violate, what happens? We're given a new demand. So what does this demand do for us? What does price do when we make our way back into our demand? 30% tap to 30% tap up above. Comes back to the 30% below. Why? First tap, break structure to the top side. Second tap, double bottom. And takes out the high of the first tap that delivered it there. It was video 2. And it's really a matter of remembering this as much as you need to. You guys remember how to drive your car. You remember to turn it off when you park. Hopefully you do. You remember all these different preventative measures or precautionary measures you take for the things that you operate. Yet we take no precautionary measures when it comes to trading, streaming. I know everybody's like, they need to see a clear chart and all of that other stuff. Clear chart is amazing for when you're taking a single trade and you want to like show it off. But the thought process behind it, if it's not as detailed and dirty, what are you expecting from that? Some people come into the market and they want the little tap and they make their money and ooh, yep, bang, and made money today. You made money, yeah, but how much did you learn? Every week, last year when I was learning, every weekend, towards the end of the week, maybe Thursday, Friday, I would always learn. It was always Thursday, actually. I would always learn something new on Thursday. Learn something groundbreaking on Thursdays. And had to watch crypto the whole weekend to, sort of confirm what it is that I learned. And then watch it during Sunday and Monday when it happens again. And by Tuesday, I would be letting people know, hey guys, this is something that the algorithm does. If you guys see, whenever we go to, just like that. Now, had I just said, ooh, price tap there, yup, and TP smash, cool. What am I learning? If that's my objective every day that I come into the market, what am I learning? I made money, yes. What did I learn? Nothing. So on days that it's not giving me this trending push, I don't even know how to figure out what's happening within the smallest part of the range of the market. Why? Because every day that I came to participate, it was to do something, to make money, not to learn. That's why I know that the people who are struggling in this, it always happens to be people who do not post charts. Do not post charts. You have to be wrong. You must be wrong. And you must be more wrong than you're right, because when you're wrong and you're learning the corrections of those little slight mistakes you make, now it helps you to be right the next time. And this is one of those industries where people have the most pride in the world. Don't want to show their losses. Don't want to, and this is what I love about even the crews that come from like other countries and stuff, because some of them, they got like no shame whatsoever. Why didn't this hold? So is this fractal going to, they got all these questions. And they will really inbox you and like ask you about it. That inquisitive mind is there. I don't, this is something that I do, but I didn't aspire to learn this to make a ton of money. I aspired to learn this because I wanted to learn this. That's it. Yeah, the money is the byproduct. I can do this in every country I want. If the New York stock market goes down, guess what? I can go to Hong Kong and trade in Hong Kong, trade in Japan's stock market, trade on whoever's market. If they could take a market and put candlesticks to that market, you can trade it. Period. You can trade it. That's way more than wanting to learn how to make a certain amount of money, because when you get that money, then what? Somebody could full margin, a trade and make a ton of money. There was this one girl in the group last year, the other group that I had, she made $25,000 in one session. Didn't know anything she was doing. Don't know how to chart. Don't know nothing about my concepts. but was on the stream and made $25,000 only putting, you guys ready for this? You ready for this? She only started with $2,000 and she made $25,000 in one stream. She's on Hanko trade, so you know Hanko, the leverage is amazing. But $25,000, not knowing anything. And guess what? Lost it all after. Lost it all after. Gone, done. Don't even know how to get it back. Lost it all after making that. Hey man, it's amazing to have me around to like help you to align little things, you know, shift certain things in your analysis. It's amazing to have somebody around to do that. But if that person is not there, if they're no longer there, your kids don't eat? What? So, you know, I say that to say, when you come into the market, yes, the goal is to enter into a trade and exit in profit. That's the goal. It's a very basic goal of trading. But what is your goal? You can just take trades while I'm streaming and make money all the time and just only limit it to taking trades while I'm streaming. And you can be profitable every single day you come into the market. But what happens when I'm not there? You give it all back, it all falls apart. Doesn't work out the way that, you know, we plan, we create it. Doesn't work out the way it's taught. Oh, well, you know, I watched this, I watched that. It helps with this and that, you know, like that really helped me for what I'm looking for. And then you open up the charts and it goes, you go just like this. You see this here? And you go just like this. Ooh, that's a buy. Put my stop right behind here. Ooh, that's a buy. And now you're trying to take this like that. And you think I don't know, but I know. You think I don't see you, but I see you. You go just like that. And you get your little pleasure of some profit here. But now you're rethinking this entry. And you're looking back on, why did I get in here? Well, there's an imbalance tap. We tapped into a zone down here. But your protection is not here. I'm sorry. Where's the entry at? Where is the zone you entered on? If the imbalance is here, how is your entry right here? And to make it look better, they'll go like this. And all of this here is just hope. Hope. All of that is hope. Because this dumb entry that you chose to get in on and you chased. So you're hoping that it all goes to plan from this imbalance. Opening your chart to jump in an entry right here. Because you saw a price leaving the area. You were not there for the tap. And now look at where it's at. You got that little tiny satisfaction of that pushing up, and you've been in drawdown ever since. And a lot of the times it make its way back, come back down. Make its way back up, come back down. Make its way back up, come back down. Stab through here, push back up like that. And now you trying to short it down there. And then what? Starts to go in a direction of your copium. I don't know about y'all, but that's a great example. Because that is a lot of people who claim they trade what's in the playlist, and their entries do not look like a playlist entry. You know, it's so interesting. When I used to work, I know that sounds like when I used to work, I would find it that people would come to work, and when they get to work, even if it was late, they come to work and they'd have this whole routine before they started. Put the coffee on the desk, put the stuff down, maybe go get into your gear or whatever it is you're using, or open up so and so. You got this whole routine of like checking the emails, making sure it's this, or like making sure certain things are screwed in before starting, or filled up certain fluids within whatever machinery you could be using, or whatever it is. There's this whole process of starting what it is you're getting ready to begin doing for the next few hours. You have a routine, you have a process, a startup at work. When we come into here, and we expecting, you see it? Oh, let me put my money on it right there. It goes the other way, has you in drawdown, whatever it is. Because these same people here at this entry here, I promise you, when price got halfway to their stop right here, they cut. And then when price makes its way back up into this wick right here, guess what? They're trying to sell the wick. They cut. In this entry, they cut. And now you're trying to sell the wick. But original bias was to the moon because of an imbalance and not knowing where you are in structure. Chase that, took the L, now trying to find another entry because all of a sudden you got in this drawdown and you believe that we're heading down, and you're trying to find another entry on the wick to short down. Your bias has changed. And it wasn't because anything shifted. No structure changed in this area. We've been in this high and this low the whole time. But just the movements of the candles is making you jumpy. You can't sit still. You can't pay attention to or stick to whatever bias it was that you had and waited until it got to that POI. Waited until it showed you what you needed to see you short. And the playlist helps us to understand all of this. And our entries, the entries we take, they need to line up with the same analysis that we have. If you did a whole top-down analysis and now you believe from the higher time frame we're short or we're long or whatever it is that you believe, you did a whole top-down analysis and traded the opposite direction because of how your first entry started. And a lot of the times that first entry is the foolish person in you, as the gambler. Your first entry. So we need to make it a habit of just, kind of aligning our first entry with the current trend, with the current order flow of that particular time frame too. And let it be a penny lot. You ain't got to throw a full lot on your first trade. Your first trade is always the foolish trade of the day. What is you doing? That's the first trade. What were you even thinking? So, I guess that's the basics of structure, is knowing that we have these highs and lows present and pairing all the different things that we've learned through what? Through application. You could remember what I said in advanced market structure. Cool. If you don't see it yourself, then you don't know it. If you don't know how to spot it yourself, you don't know it. Oh, I watched that video, and all you did was watch it. That video is just as good as the last thing you forgot you watched. It's just as good as the last thing that you forgot you watched. So, I guess the goal of this, I'm talking to you guys about structure. I'm talking to you guys about, the different order flows within structure, like this little thing we explained here, the order flow within here. That's the details of it. But there's one component within these details that a lot of people miss. One component. That's advanced market structure. Advanced market structure. Now, granted, you're going to have so many violations of S&Ds responsible for the breakage structure. In every session, you will have so many violations of it. Do you need to track all of them? When you're learning, yes. When you're trading, no. When you're learning, yes. When you're trading, no. When you are learning, yes. When you're trading, no. And this is why when I see certain people charts who have all the zones marked up, zone, I know that they have no confidence whatsoever. Zero confidence whatsoever in what it is that you say you know and believe, because you're marking up everything. Everything. Now, if you had everything marked up to the trend you were trading, then that's different. Because if I was like, let's see. If I was like, here's one swing, here's another swing, here's another swing here. Now, if I was like this, and I was anticipating another swing here, if price was to shift down, I have my 3 swings present. Within that third swing, price is currently ranging. Tapped me into the 50%, did not take the low that brought me here. Did not take the low. Took a series of them on the inside. Tapped into the origin. After the S&D that was responsible for the break of structure was violated, went back to the origin, and then pushed up above. Flip this high, tap back in. Do we expect this to be flipped too? The current order flow is bullish. According to what we have going on here, we already tapped into our 50%, shifted away, did not violate any lows. Along this larger trend that we're using a larger swing from. So guess what lows matter from the larger swing? Oh, that just happens to be. And did not violate it. What does that let us know? For the selling that's coming down, it's so insignificant that it didn't even give us the low. Now, are there opportunities to short in there? Yeah, there's plenty. There's plenty. Look at it. There's plenty. There was plenty. You know, had you shorted from here, nice little snap here. Had you shorted from, you know, the imbalance, nice little snap here to go down. Had you shorted after violating this low, nice little tap here, and then to shift away to take out the low that brought it up. But if we have a low, a high, a lower low put in, and then we violate the high, sound like a bearish flip to me. I mean, bullish flip to me, sorry. Sounds like a bullish flip to me. And that's how you look at the order flow that you're trading and judge what entry you're looking to take based on what has already happened previously. This is expectations. This is why sometimes you guys see me, change the colors of it. Sometimes I'll change it green, or I'll change it, red, just because I anticipate that. It's not something that's happening, but I anticipate it. So if I ever change it green a lot of the times and it's like this, and you see price making its way up to potentially run the high, just know that the zone that I'm eyeing is this one. So when price trades up above this, it's this down move into the move up that I'm eyeing. So now I have my demand. Even if I was anticipating that it would be a supply if we ran below, I know that it's still a demand the minute we come up above. I'm not looking for this when I'm in a trade. Why would I be looking for this when I'm in a trade? In a trade and looking if I'm in a demand zone or not? No, sir. So look at this wick. Look at this wick that somebody would have been shorting from. Look at this wick. That's what this is here. This is the 15-minute wick up here. The 15-minute wick right here, remember? We said, oh, somebody's going to probably look to short from here. Look at how you get this little tiny short within here, and then what? We violate the wick. So guess what? Now that's -2. First is the dumb entry that was cut in drawdown. Then it was the flip and the bias that was violated. And you start to see where people ruin themselves, where people mess up. because then they see that and they go, oh, there's this swing up here. So we're expecting price to tap into the swing. This is the origin, the beginning of the trend. All these different things that they start to make up in their head as to why their stop got clapped twice. First of all, the first stop wasn't clapped. It was that they just dumb entry. They clapped themselves. Second time, stop clapped. And now trying to find an entry in here. That maintains the bias of having no bias. What is it that you see in there that makes you believe that we're bearish? One, two, three. What is it that you see in there that makes you believe that? So it's really a matter of, I posted a little response in the chart section, the members chart section, to one of the young guys in the group, because I wanted them to really get this, to really understand what I'm trying to say. And I was taken back by the response. That's okay. When he upgrades, he'll also see this video and hear me talking about it. Do I care? No, but he knows it's a learning experience for him. Saw this here. And what I'm saying is pay attention to the fresh zones. Pay attention to the order flow that you're currently in, and not the one that you're expecting. Not the one that you're expecting. Because if you let's say you grab a zone down here. Let's say you grab this. This is it. Let me see. This is the S&D responsible for the breakup structure right here. Right here. For the breakup structure to the downside, right? And we violate it. We create an S&D that gives us the larger structure. So when price comes back to it, we tap into it, and then we get a shift off of it and we go. Trading order flow is more important than the zones you select and your hope in them holding. Your hope in them holding. This thing that I just mentioned right inside of here, that's an advanced market structure. It's an advanced market structure. This little thing that I mentioned right in here, I break that down in detail in advanced market structure. I know it so much that I don't need to tell you that it's advanced market structure. I don't need to remember that it's advanced market structure. I just need to remember that little sequence in there. And I'm like, oh, okay, this would be the POI that I would choose then. And if I see a flip off of this, then I'm comfortable with that because this is the POI I would choose. And all the different things align from what? Video 2. Swing points. And I realized that in swing points, I told you guys about counting your pullbacks. That's when I introduced it in the swing points video. Counting your pullbacks. And a lot of people are like, well, why do you count the pullbacks? Yeah, I watched the playlist already, but I don't think that. No, you did not. No, you didn't. You didn't watch that playlist. Asking me questions that if you wrote down the things that I said and look back over your notes, you would realize that I said it already. You missed it, not me. When I said everything was in the playlist, the YouTube playlist, everything is there that you need to know, yes. That's the very beginning of my concepts. That's the beginning. people want to cheat the beginning and learn the rest. Nah, that's not the way it works. I am going to do a boot camp coming, in a couple of months. I think probably the summertime. I want to do a boot camp. I'm not sure if it'd be virtual or in person. Not too sure yet, but I want to do that. Because I know that people have a better experience learning hands-on or learning with the instructor there than they do, having to study themselves. Some people don't have the discipline to study themselves. Don't have it. So, it's probably gonna be like a 4 or 5 hour, like from zero to hero course. It's like zero, slide points or PowerPoints, whatever it's called, slideshow, anything, just it's gonna be like that, like a very intense day. But everything you write down from that day will be golden for the rest of your life. Everything you write down from that day will be golden for the rest of your life. Because I'll teach stuff that I never even publicly taught, and it won't be recorded. So you just have to rely on what you wrote down. But you'd be a better trader if you relied on your memory. You'd be a better trader. It's just what's locked up into your memory that prevents you from remembering the things you're taught. Is it Harry and Meghan? We got to use our brain power better. We got to use our brain power way better. I'm telling you, I'm forgetting so many things. So many things I don't remember. But if you open a chart in front of me, goodness, you better get the fire extinguisher. So, this was just a video to just touch on very basic things. Very basic things to help you guys with, an understanding of what you should be looking for when you get in, what you should be anticipating. And don't get in the market to anticipate. You're anticipating when you're learning. You're trading what you see happening, and you're anticipating when you're learning. Not when you're trading. Anybody come to the game and be like, yo, what's the play y'all running? How y'all put that play together? Is it so the 3 goes back there and the 5 is okay? So where do I go in the play? With 10 seconds to go in overtime. With 10 seconds to go in overtime. Yeah, all right. That's how it is when people ask me, questions on the stream, and I'm just like, I'm not even gonna pay attention to this chat. People who learn, they just gonna come and hear more while I'm chatting, and the people who refuse to and want to be spoon-fed, they're gonna be lost. They're gonna be lost. Trade what you see, not what you think. Your anticipation is when you're learning. Not for when you're trading. It's when you're learning. And if you need to learn in Asia. Or if you need to learn faster, learn from the 15 second. The 15 second. Y'all hear that? The 15-second time frame. I would tell y'all go to the 1 minute, but some people's brains might, explode on that. Because guess what? On the 15 second, on the 5 second, on the 1 second, you will always see the S&D responsible for the breakup structure tapped, and then you'll always see the response after it's violated. Tapped or violated. You'll see the S&D responsible for the breakup structure. You see the response the price gives when it gets to it, and the different types of responses. The S&D tap for the breakup structure, do you guys expect price to tap into the 50%? Do you guys expect price to tap into the 30%? That might be the next question people have. And that's too far ahead if you don't even know what it does after it taps or after it violates. There's two things that it does. You can violate the S&D responsible and trade higher. You can violate the S&D responsible and trade lower. Which one is it? And that you'll find out next time on Dragon Ball Z. But I hope this helped. I'm gonna let me stop the recording right here. Probably gotta edit out that part with the girl that made that money. Just in case she hears it. Don't want to feel discouraged. I mean, when people lose their funding account, I always tell them it's good you lost it. When people come into the chat and they're like, oh, you know, I'm so and so away from my loss, from losing my account. Can you help me? No. Use the strategy that you use to get it. Oh, I'm sorry, that's not helping you keep it? That's what illegitimacy does to you. That's what illegitimacy does to you. You got it in an illegitimate fashion. And now you have to continue to do the same stuff to keep it. Y'all, I've been watching this Madoff documentary on Netflix. And I was waiting for them to get to the part where he was so skilled in trading. So skilled that this man was the most highly revered person on Wall Street. His transactions alone did major damage to the markets. This man created NASDAQ. And guess what? That man did not know how to trade. Did not know how to read candlestick charts and trade. But could do 54 or 64 billion dollars in damage. Could not read a chart. Mind blowing. I was waiting. Oh, Titan of Wall Street. All these big guys, well respected and revered. You throw a candlestick chart in front of them, and all you hear is abri, 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 abri. That's all, folks. Don't even, man. Let me end this recording right here. Hope y'all enjoyed this video. If you didn't like anything I said, the cancellation page is right above the announcement section. Good night, y'all.